Okay, so we have Ryan here. Ryan's from Kiavi. We're glad you could join us for the Inner Circle call tonight, Ryan.
Great to be here. Thanks
Kiavi.
for the opportunity.
Absolutely.
All right, Ryan Mincher, Kiavi Funding. For y'all who don't know, we're the largest lender in the real estate investment space. We do hard money loans, rental loans, recently really picking up on new construction as well. We lend nationwide. We recently launched in Mississippi and Vermont. We're now in 48 states. Been here for almost 6 years. I remember when we were in like 13 states. So I've been a part of a lot of growth. Some of y'all might have heard of us. We used to be called Lending Home. That was back in the day. Our offices are in San Francisco and Pittsburgh. I'm from Pittsburgh, so that's when I started with the company. And I'm located in Austin, Texas.
Nice. Um,
So feel free to jump in with any questions. I know we have a small group on the call right now. But if you have something, I'm sure somebody else within the group may have the question as well. Um, I don't have a presentation, but I do think that a lot of what I'm going to talk about, you can find on our website as well, kiavi.com, Kiav as in Victor, I.com. A lot of really, really good information on there. You might find useful testimonials, recordings, FAQs for all of our different products. Um, my title at the company is Strategic Experience Manager. Our sales groups are sort of focused on different segments of the real estate community. We have teams that specialize to try to give the customer the best experience possible. My experience is mainly with investors that are really active. I know Chris, before we started the call, you mentioned kind of the segment of like 0 to 5 flips
mhm.
or burrs in the last couple of years. We recently changed our requirements for what we consider our top tier for clients. It used to be 5 in the last 2 years. That is now 3. So some of y'all that may have been doing this for a little bit, you may qualify for our top tier, which would be my team, and you may have the opportunity to work with someone like myself. But our sales orgs are structured so that you have a dedicated rep like myself that is responsible for getting to know you as an investor, your goals, understand if there's different loan products that may serve your needs, and work with you from new loan origination, strategy, construction draws, as Chris mentioned, refining into a rental property, et cetera.
And one of the cool things about you is being able to pick your loan terms. You don't like with our traditional lenders, you don't go pick your loan terms. So your platform's pretty cool. I'd like you to touch on that a little bit. But then the ability to pick your own loan terms as well is pretty cool. And then once you pick those, you guys still call and lock in a rate.
Mhm.
So you want to explain that a little bit, the onboarding on the dashboard, which is a pretty cool platform, and then how it works to pick your loan, pick your terms.
Yeah, absolutely. Like I said, we have different sales orgs, so we do have client onboarding specialists that you may work with in the near future, or you may have already worked with. But like Chris said, like we're extremely tech forward, probably the best technology in the space. Our website, you can onboard yourself. Like you can go there right now, create an account, upload a new loan in 5 minutes. The qualifications are pretty straightforward. We look at credit score. So we'll do like a soft credit check. We'll never do a hard pull on your credit. 660 minimum. We will ask about your experience that may qualify you for different terms. But everything's online. As Chris mentioned, you can, if you have a rental property and you wanted to check in and see what rates are available, monthly payments, you create an account, you log in, you click new loan, choose the rental property option, and you immediately are taken to a pricing calculator where you can input the details of your property, the loan terms that you may be looking for. The system will say, "Oh no, we don't accept those numbers. We don't do 100% financing on a rental property." Right. But once you fill that in, you'll see all the different products available: 5/1 ARM, 7/1 ARM, 30-year fixed, interest only options. You can toggle by prepayment penalty options as well. And pretty soon here in November, we're also going to have the option to buy down rates or buy up rates. There's a lot of different things that clients have brought up to us from a feedback perspective as, hey, your tech is really good, but you may still be missing some of the nuances within the products. And so we listen to that feedback. We make the tech enhancements, and like Chris mentioned, it's right in our website. You don't need me. I'm here to help, and I'm here to help get things done and solve problems. But when you come across a deal, you don't have to wait on me in the evening to price something out. And I think that's a big value add from the
Yeah.
website perspective.
Yeah. And it, from one perspective, it kind of eliminates that. Like right now, we're chasing lenders currently in my business, and that's not quite the case with how it's set up and how it's supposed to flow. So, it's a very very good perk. What about your new construction? I've been being asked more about new construction recently, and something I'm going to start going into 26.
Mhm.
How do those loans, how are they structured and how do they look?
Yeah, of course. We do about 50 million a month in new construction right now as a company. And we're looking to do 100 million in Q3, or I'm sorry, in Q1 of next year. So some of the recent changes we made, because look, I mean, to answer your question, it was relatively cookie cutter. It was you need to have at least two new constructions already done in the last 5 years. Financing, 11% rate, 1.5 points, $1,500 servicing fee. It's relatively competitive from a cost standpoint, but it's not as creative or flexible. That was feedback we heard from clients. So we have recently. I was doing new construction deals. I am now no longer doing that. We have a specialized group of sales and operations team that's what they do, and we hired experienced folks that have been doing this for 15, 20 years. And so I think we're going to get some more flexible options here in the near future. But currently, the way we structure it is we'll finance 85% of the total cost of the project. So total cost, think acquisition of the land, right? You may have already paid for that in cash or with a partner, or you may be wanting to buy land. So we'll include that as part of the cost. Think soft cost as drawings, permits, anything to do that's like not hard construction cost plus demolition. Those are included. And then the hard build. So whatever that total cost number may be, we can lend up to 85% of that number. In other words, we want to see that you have 50% equity in the deal. You may have already realized that through land cost, or you may realize that through we call it a borrower equity contribution, which means we'll hold back some additional draw funds that you'll have to realize as real equity as opposed to us financing more than 85%. So I can get into a little bit more detail if you'd like, but that's general structure.
Nice. And do you apply for that just like you do a normal loan? Okay.
Yeah, all the loan products are available.
Same
Like
thing. Yeah.
I hate to make it oversimplified, but those are if you're familiar with technology and you're used to this type of stuff, you go in. There's 5 different loan products that you'll see at the new loan page. There's bridge, which is a standard fix and flip. There's rental, one property. There's new construction, one property, and then there's portfolio in there too. So we have portfolio rental, 5 or more properties in your portfolio. You try to refinance and cross collateralize. We have that as a product, and then we also have some jumbo sort of multifamily that we're toying with. We don't do a ton of those.
Will you ever ask for tax returns?
Very, very, very rare. It's not a standard request. Tax returns may be requested just to verify ownership percentage within a business. We don't look at financials really ever. For exceptions, if there's exception to our guidelines, we may ask. But the only product that really requires financial statements or bank statements would be our new construction. We want to see that you have cash on hand to service certain scope of work needs, et cetera.
Okay. What would that look like? $200,000 build. What would you be looking for in cash?
Yeah, so we'd be looking for 12 months carry cost plus 20% of the scope of work.
Okay.
So if it's 200 grand build, then you're looking at what's that, 40K plus 12 months carry. call it, let's just call it $1,500 a month fully drawn. So yeah, 40K plus, what is that?
Yeah. 12.
18.
Yeah. Okay.
Yeah, so 60 grand. Yeah. I mean, I think, look, generally as a company, we're, like I said, very tech focused, very data driven. I know a lot of places say that, but like we have probably 10 or 12 internal models that we use that you never see as a client.
Mhm.
It's helping us derive pricing. It's helping us customize pricing. As you mentioned, it's not just these are the terms. It's specialized for each client based off of their qualifying criteria. um, Property models where as soon as you input a property address, risk models run in the background that help us price things out more competitively or more risk averse, depending on the risk of the property. Online, a tool that you might find useful. Am I able to share my screen?
Yeah. Let
I'd
me,
like to show a quick tool really quick. I'll request it.
there you go.
There we go. Let's see if I can pop my screen back up here. Are you all seeing my screen here with the website?
We are seeing your VPN connection right now.
No, that's not what we want to see.
That's
Sorry. Let me
okay.
try one more time. I want page 3. What about now?
Yep.
Okay, so this is the landing page of the website. Under resources, this first tool is a look into like what our model does. So this is going to give you an estimate of what Kiavi may find as an after repair value. It doesn't, you don't have to do the loan with Kiavi. This could literally just be a useful tool for you as you're prospecting deals.
Nice.
You can put in the property address. So this is, you can put in the property address. Let's say your offer price, your estimate of reno cost, and click get estimate. And if we have data within our database that can spit out, look at that. That was what, 5 seconds?
Yep.
It gives me an estimated after repair value. That's using like comps that we have in the background. Our estimate of cash to close, the lowest rate available, and then you can go directly into the system and start a loan application for that property. A lot of my clients have found this useful. Some states are better than others as far as public records, but that's one of the first things I introduce to people because it's free. I mean, you don't have to pay anything for that, and it serves some value.
Yeah. Hadn't played with that yet. That's pretty cool.
Yeah. So yeah, other than that, we have some other specialized programs for clients that have grown with Kiavi and are scaling up. And you may have seen some marketing of us offering like 100% financing on new purchases. That's for very active clients. One fun story I like to share on a call like this is, my largest client now, he operates in Missouri and Kansas and Alabama, Georgia. He's now scaled up, but he started with us 4 years ago as a new investor, new to the real estate investment, and he'd been doing it on the side. He had a full-time job, and he started with our new client onboarding team. After a couple of years, he had now done 5 properties, which is our qualification at the time, and he got transferred over to me, and things were going well. He quit his full-time job and started doing real estate 100% of the time. He's my largest client. He's doing 3 or 4 properties a month now, where that was his scale over a couple of years. So he valued the ability to only put 10% down or 15% down for a new purchase. It helped him free up cash and do more properties, but it helped him scale to other markets. He was mainly in Georgia, and
Mhm.
he was able to hire a team and get get some relationship with agents in different states. And that is something that's fun for me to be a part of. But it also, shows the value of some of these tools that we have weren't available to him when he started. And as we have grown and he has grown, like it's just cool to see that from my side and how he's able to, our financing is a small part of what everybody here does, but sometimes it's an extremely valuable part where it helps you scale up the business and feel confident that you have very, very competitive terms and you're not, bouncing from lender to lender over time.
Yeah. Are you able then are you okay with doing the bridge, like doing buying something, fixing it, and then going over to a long-term product?
Yep.
Okay.
Yep.
Yeah.
We'll do all of that.
No seasoning?
The seasoning requirement is 90 days from acquisition.
Okay.
So think I buy a property today, I can sign on refinance docs on day 91. There are certain situations where we could do it faster. However, in my opinion, it doesn't provide value to the investor because we don't use the appraised value
Hmm.
under 90 days. We would use like the acquisition cost plus documented cost of improvements. That's not a fun process. I say just wait a second and get your full value and leverage.
Right, right. Yeah. I mean,
Yeah.
most projects you're looking at a 60-day turn. I mean, 60 anyway. So
Right.
yeah. Yep.
Yeah. And I'll share another little story. And if you have any questions, I'll pause after this. But Chris and I have worked together on a few deals. I'll be the first to say he had a terrible experience. Our performance was not up to par, and I think that the fact that he asked me to join this call shows like professionalism, and he understands that there is like true value underneath the back and forth of the misunderstanding. Like that does happen sometimes when you're onboarding a new relationship. And you know, our like we were doing DSCR like rental loans, and those are more like I guess like standard loan product within the industry. And some of them are going to go really well and some of them aren't. And we don't have as much control from a lender standpoint. You're going to get a lot of the same from different lenders in the space when it comes to like DSCR loans. However, on our bridge loans and on our new construction loans, we service all of those loans. We handle all the draws process. We handle all the servicing.
Right.
And a lot of things I've come to realize is that the experience and terms are dictated by the loan buyers in the secondary market. And on our bridge and new construction, we are that person. So
Yeah.
we have a lot more control of our bridge loans when it comes to process and pricing and flexibility. And, I know that sometimes you don't always need financing for the acquisition, but I personally think that our product for bridge loans, nobody can compete with that in the entire industry. Nobody else has the back end, like I said, data and tools and et cetera and flexibility. Whereas you may see more price shopping and a more out of the box or out of a box type deal for DSCR refinances. So don't be afraid to shop rates on DSCR. That a lot of the times people are within a from an experience standpoint is pretty comparable.
Yeah. Yeah. And I mean, well said on that. And the fact that you're taking customer input, being able to adapt what you're doing to be more client, I guess, friendly, we'll use that word, is commendable. Be able to adapt your model to that. We've got some people that they won't adapt. It's these are our underwriting guidelines. This is what we have. It's our way or nothing. And that makes it hard to do business some days. So
Yeah.
yeah.
Yeah. Does anybody else have any specific questions for myself? Doesn't have to be about Kiavi. It could be about industry overall. Well, Chris, if there's no questions, then feel free to share my contact information. Check out the website, please. Like it's just good reading if it really gets you going. And feel free to contact me at any time. We have some 50 salespeople on our team that all have varying levels of experience and are in different markets. I do a lot of business in the Missouri and sort of Midwest area. So if you have questions or want additional information,
Yeah.
call, text, email. I'm happy to help.
Thank you. Yeah. Thank you, Ryan, for your time tonight. And we're going to stay on a while, but we appreciate your time and I hope you have a good evening.
Thanks, everyone.
All right.
Take
Talk to
care.
you soon.